So my name's Lee Bergstein. Below me is Cooper Knowlton. You can raise your hand. We're partners at Bergstein, Flynn and Knowlton. We're a small law firm that offers services to small businesses and a variety of professionals. And obviously, for the last couple of weeks, we've been conducting webinars about issues that many of our clients are confronting, and the most relevant one today, because applications are due tomorrow, or not due tomorrow, they'll begin to flow in tomorrow, is the Paycheck Protection Program. And to help kind of wade through some of the logistics, how to apply, when to apply, where to apply, and how some other considerations that businesses might want to consider, we've asked a few guests to join us, and we're really delighted that they have. First is Alyssa Thomas. Hi, Alyssa. Alyssa is the Director of Talent and Strategy for, it's pronounced MAKE, but it's the Manufacturing and Industrial Innovation Council, an industry partnership run by the New York City Department of Small Business Services. They organize a consistency of industrial businesses who lead the team's work on matters related to policy, regulation, talent, and technology. And we think for those reasons, Alyssa is going to have some really interesting insight into how small businesses are viewing the Paycheck Protection Program, and we're excited to have her here today. We also were really lucky to have two representatives from Citibank, Haitham Khalid, who's the Vice President of Healthcare Practice Finance, and he's been a commercial banker for a number of years, helping small businesses navigate a number of terrain, probably not as bumpy of a terrain as the one we're currently encountering, but all other measure of terrain. And we're also joined by Idia Cruz, who's the Vice President Relationship Manager for the Business Banking Group. And she's really an expert when it comes to Citibank, SBA national lending, and obviously the Paycheck Protection Program is going to be in many ways funded by the SBA. So hopefully she can provide some really interesting insights on that front. And finally, we're joined by Barry Davidoff. He's a partner at Davidoff Consulting. His practice focuses on tax planning and financial consulting for businesses and individuals. And over the next few days, next few weeks and months, obviously small businesses and individuals are going to be figuring out how to apply for this really exciting loan program that we're going to be talking about today. And Barry, we think, can offer some insight into how businesses can approach the coming weeks and months, probably not months because money will run out by then, but weeks as the loan program gets off the ground. So Barry, thank you for joining us as well.
You're welcome.
So we have a really great group of individuals who are going to be speaking to you about a myriad of issues related to the Paycheck Protection Program, and we're excited to talk to them. We're going to start by giving just a really, really brief overview of the program, and then we'll jump into some questions. So I'm going to turn it over to Cooper to kind of give that overview.
Yeah, hi everyone. So yeah, I want to turn this over to the guests pretty quickly, but I just want to make a couple of points just to begin with. So as Lee mentioned, we're talking today about the Payroll Protection Act, which is just one program in the CARES Act, which was passed into law last week. Important to keep in mind, the CARES Act is filled with all sorts of things. There's tax relief, there's counseling and training, a lot of resources available for small businesses in that piece of legislation. But we're really focused just on this one piece. And the reason that we're largely focusing on this one piece, this one program, is because so many of the people that we work with, so many of our friends and colleagues are eligible for this specific loan, for the Payroll Protection Act loan. And it's also very easy it's designed to be very easy to get. We're going to hear from our friends at Citibank who are going to give a little background on how that process works. But it's designed to be easy to administer, quick turnaround time. There are specific things like there's no collateral requirement, no personal guarantee. You don't even really need to show an ability to repay the loan in order to get it. So it's a very unique piece of legislation, or a very unique program. Real quick eligibility. If you work for a company, if you have a company that has less than 500 employees, you are eligible. A not-for-profit with less than 500 employees, you will be eligible. If you're a freelancer, sole proprietor, you are eligible. So if you work, as long as you're not in a massive company, you are likely going to be eligible for one of these loans. Quickly, though, I just want to make one final point. These are loans. I think there's some confusion that this is like free money from the government, and there are some loan forgiveness pieces in this piece of legislation, but these are loans. This is money that you are getting from the bank, from the government, and you are expected to repay that. Lee just sent me some guidance from the Treasury, and it looks like they're now saying that the loan should be repaid in 2 years. There's a 6-month deferred payment piece, but then the interest rate is very low, 0.5%, but you are expected to repay these loans in 2 years. And that just came out within the last couple hours. So with that said, I think it's probably helpful.
I just want to throw in there is a sizable forgiveness piece to all this, and we'll talk about it, and we'll ask questions to our city professionals about that. But the forgiveness is for a very specific piece of the loan.
And we can talk more about that as we go. But I do want to throw this over to Hytham or Adia, who can maybe talk a little bit more about the application process. I know these applications are going to start becoming available as soon as tomorrow. So maybe you can explain a little bit about how this one specific bank is planning to facilitate this process.
Well, thank you guys so much. So what we're doing right now is we're working with our clients on an online-based application where it's self-directed. Clients can view the application. It will be sent over to their city business online. So if they are existing clients of ours and they log into their online banking, they should be able to see a link. We're also working with some of our direct book of business clients where we're actually sending them emails, inviting them over to apply for this loan. Now, we're working very, very, very hard to make this extremely streamlined, as well as the turnaround on approval, where it should be 48 hours if the loan is less than $1 million. So we're working with dedicated underwriters to process this. What we've been talking to our clients to get ready is to prepare at least 12 months of their average payroll statements in order to use that as supporting documents. Because as you mentioned, Lee, part of it would be forgivable loans, and that would be after the 8 weeks period, it would be reviewed, having said that having proven that they use the money for payroll purposes. 75% of the amount they're applying for is used for payroll. So again, we're still working with the SBA to get clear guidelines, and we want to make that available to our clients. So when they actually go into this, they understand that it will be a loan, although some of it is forgivable, but they still have to use it in a sense that it's for payroll. They rehire part of their employees, and that's what we're trying to, make that available to them. And
do you have any sense,
with
respect to the review period? Do you have any sense? Is it going to be a wholesale review for every business that applies? Is it going to be random audit? Is there any sense yet as to how that's going to work?
Well, in terms of our guidelines, we're still going to have to implement some of Citibank's guidelines when it comes to industries. We know that there is there's very limited background in terms of the credit history of the owners. There has to be a KYC, which we already have for our existing clients. That's why we're encouraging a lot of business owners to go to their existing bank to apply, because if they were to go ahead and do a full onboarding, it's going to be very challenging, and that's going to be time consuming for them. So we would already know our clients, we would know the ownership structure, and that would actually streamline the process for them.
Correct.
And
go ahead. So what Hytham is saying is absolutely correct. Hytham works with more of the small business clients, which are the retail bank clients. And I actually manage a portfolio of clients that are commercial bank clients. Their sales are between $10 million and $100 million a year. So with my clients, there will be two different processes. We have clients that are currently borrowing clients, and they have a dedicated credit officer, an underwriter. So in that case, the underwriter that works with them on all their other facilities will be the one processing this application. And that will go directly through the banker, being myself. I will be sending out the apps tomorrow. That this is what we're told. We'll have the applications tomorrow. I actually just got off a call with SBA again, our internal SBA director, and we're told we'll have apps tomorrow, but it looks like the processing will all start on Monday because there's a lot of work that needs to be done on the back end. The process is very streamlined. A couple of questions. I would say there's about a page and a half, maybe about 10 questions that the client will have to answer directly with the banker. So I will be calling my clients directly tomorrow. I have a list of clients that have been calling me, as you can imagine, over the last 2 weeks, and this legislature was just passed on Friday last week. So these clients already have informed me that, yes, they will be applying. So I've reached out to their credit offices, and we are trying to stay one step ahead because we know that this is time sensitive, as many clients are afraid that monies will run out. So what we are doing, there will be two processes. Clients that are existing to the bank but have no borrowing relationship or have a relationship that is currently less than $1 million, there will be a streamlined process that we will email them the link. They will click on the link and follow the procedures. It's going to be very self-explanatory, and then they will be able to submit, and those will be processed by a separate department. Possibly a third party working with Citibank those will be pretty quick applications to process. The other part will be my existing portfolio clients. These clients I will be the contact person. So I will be reaching out to them one by one, going through the questions. And just to give you an example, some of the questions are, how were you affected by COVID-19? It would ask, about the employee. Has the employee size, have you had to let anyone go? So there's basic questions that the client can answer, and a lot of the answers we already know because we've been speaking to them for the past 2 weeks. We will have that, and that will be submitted with a questionnaire that the banker has to complete, and we have to attach their most current KYC and beneficial ownership certification to be sure that the ownership of the company hasn't changed. Along with that, we are asking the clients to submit a 12-month report from their payroll company. If they don't use a payroll company, they can certainly print something off their QuickBooks or an Excel spreadsheet. What will be done with that report is the underwriters will be reviewing, because even though this is an SBA program, the underwriters at Citibank will be the ones making the decision as far as eligibility and loan size amount. So they will go through the payroll report, and as you might or might not know, there's a cap on individual salaries of $100,000. So they will be looking to come to a number that the client will be eligible to apply for. Now, once we submit the application, the goal for the turnaround time is 48 hours to possibly 72. It really depends on the influx of how many applications we get. And we're trying to get, obviously, the approvals as quickly as possible and the money in the hands of the business owners as soon as possible. With that, the bank is not going to be processing new to bank applications for the same reasons that Haitham had mentioned. To onboard a client takes quite some time. To complete a KYC and have it approved takes time. And because this is time sensitive, we really recommend that every client reach out to their own bank. Where they're banking now will be the quickest, most efficient way to get this done. They can contact their bank and they will be happy to process the application. We have clients that have already gone on to the sba.gov/disaster website and started a loan on that page, which is the EIDL, Economic Injury Disaster Loan. That loan is different from the PPP. However, if a client does apply on that site and was approved, they are eligible to refinance that with the PPP loan. And one of the reasons, the major reason why they might want to do that is because there is a certain part of the loan that could be forgiven. So the forgiven portion of the loan is a separate application. Once the client comes back and says, I'd like to apply for forgiveness, that's a step 2. First, they'll get the loan. Step 2 will be the forgiveness. Now, the funds, the way the forgiveness stipulation works, in order for the client to be eligible, they would have to submit certain documentation, and we're still waiting for guidance from SBA. But that documentation will show what the use of the funds were. And as long as the funds were used for the purpose, which includes the payroll for the employees, they can also pay interest on a mortgage obligation or interest on any existing credit that they have with the bank. They can also pay rent or lease for the property that they occupy. So the bank, in this case, Citibank, will be determining if the use of funds was for the accepted under SBA. And if it was, then the client would qualify for either part or all of the loan to be forgiven. That step, we don't believe will happen to maybe June or possibly after July, because the period where the funds can be used is anywhere from February 15th to June 30th. During that period is what we're going to be looking at for use of funds for the loan. So just to answer the question, yes, we recommend that the client go directly to their bank, that they work with their commercial banker, or if it's a small business banker, as my colleague Hytham works with small business clients, they should definitely reach out to their bank as soon as possible to get this application in. Applications will be available tomorrow and will start being processed on Monday.
Thank you so much. That was very informative.
Sure.
I wanted to turn this over to Alyssa and hear what I know you work with a lot of small businesses and with the city, and I'm wondering what you're hearing and what you're advising business owners. If most of the people you're talking to are planning to apply for this, and any other advice you're passing along to small business owners during this time.
Yeah, so first, thank you guys for having me. So I work for the New York City Department of Small Business Services, and so we're agnostic. We work across industry, but just some context before I get started, I work on the manufacturing and industrial industry partnership. So the kind of data and concerns that I'm hearing, I'm going to share about are really related to industrial businesses, and I think that they're probably related to a lot of the businesses participating in the webinar right now, but the data I'll share isn't agnostic to everybody. It's just for this one sector. And so, as I'm sure bankers as well as heard, and you guys have heard a few weeks ago, really starting to kind of getting calls where the first concern is capital, and the products that were available at the time were really not adequate to be able to meet the needs of industrial businesses. So it tends to be a very capital intensive series of subsectors. And so what we did was put out surveys between us and some of the other organizations that we work with to really understand what the capital needs were, what were some other issues that businesses were struggling with, and what was the exact kind of loan amount that each business would need, and when did they expect to run out of capital. And so from that perspective, we have, if you are familiar with small business services, we provide a lot of services across workforce development, MWBE certifications. We have capital access programs. And so we have 2 programs out right now, an employee retention grant. And we also have a loan out right now as well, but both programs quite small, not quite adequate for industrial businesses. And happy to answer questions about those 2 products at the end of this as well. But so what we kind of heard across the board with our industrial businesses was that around 25% were in immediate need of cash flow and had already temporarily suspended all of their operations. 48% were looking at 3 to 4 weeks of being able to sustain themselves financially. another 16% 5 to 8 weeks, and then only 10% of the industrial businesses we surveyed could sustain themselves past 3 months with the capital that they had. And so obviously, like, relatively concerning data to look at, given not knowing the length of the crisis that we're currently in. So the SBS products that I spoke about, again, one is a smaller grant up to $27,000, and the other is a loan program up to $75,000. The businesses that we're working with on average need around $170,000 worth of capital to be able to sustain themselves, with, you know, my larger businesses in the 50 to 200 employee range needing around $400,000 plus in capital, and then, you know, businesses that are still in the industrial spectrum, maybe on the smaller kind of maker side, needing around 40, 50, 60,000. So it was really a wide range of funding options available to them. And so this was kind of the basis to understand in the market what was not serving them well and what was, and how eventually, when the legislation for the PPP came out, how that product could better serve them. And so in terms of, you know, issues that they're dealing with the most, obviously everybody on the call is aware of the decrease in sales, but we certainly have a unique sector that is well positioned to respond to supply chain needs across the medical community, as well as in the food and distribution community. So we also have businesses who have seen an uptick in demands for a variety of products they've been able to pivot to. But, you know, concern for those businesses and concern they've expressed when demand for the products they've pivoted to supplying whittles away as the crisis resolves itself. Will there be a market for their traditional products, and what will their capital access look like then if they don't act now? And so the PPP coming out, in our mind, is a product that's better suited to businesses in the industrial spectrum because of the size that it can potentially go up to. Again, on the SBS side, a little bit smaller in terms of what we are able to provide. And so for us, we've really been advising our businesses on preparing financial documents that would meet both the PPP product, which has been kind of clear, unclear thus far, as well as the SBS loan product that's available, because we are certainly concerned in cases of the city's products, as well as what the federal government is putting out of money running out relatively quickly. And so to give just context of that, our grant application has been live for 2 weeks, and tomorrow we will close it because we've used all of the funding up for it. And so I speculate that there will be something similar, and I'm sure our friends from Citibank probably also speculate as well that this SBA funding is not going to actually last that long. So that's really been one of our biggest concerns, is to have them prepare a wide range of financial documents so they're applying to a multitude of loans and not just this one loan product, because we're not quite sure you know, where they'll be able to actually get an offer and secure funding from. And I think, you know, on another side, as Idia also mentioned, we are definitely concerned that some of our businesses, at least some of the businesses I've been talking to, don't already have SBA lenders that they're working with. And so I think, you know, being very aware of the variety of financial products that are out there is really, really important. While this is a product that can provide the most capital, has the best terms because it can be forgiven, I think that we are putting out blogs and we are putting out emails kind of on a daily basis to our businesses and calls about all of the financial products that are available to them. So pretty important that businesses are thinking about all of the ways that they can apply to different products with their accountants. And then when it comes to this particular loan, we've already released around a week ago to our businesses a list of SBA approved lenders and encouraged them to start reaching out contact prior to when the application becomes live tomorrow. But, you know, still imagining that bankers themselves are going to be overwhelmed with the amount of inquiries that they're going to be getting, and that the system, in terms of the amount of funding, is going to run out quickly, and there's not yet confirmation if a fourth stimulus package would include more funding.
Gotcha. That's very helpful as well.
I think a big takeaway from that is there's a lot of stuff to unpack there, but is don't wait. Obviously, you can apply until June 30th. I think that's the application deadline, but this should be a priority for businesses that need the funds in the next couple of days.
Yeah. So turning this over to Barry, with that in mind, it sounds like everyone sort of alluded to the fact that you want to get the documents prepared quickly. You want to be ready for when this application goes live. And there is this fear that maybe the money will run out at some point. So how are you, I know we spoke yesterday and you said you were working with a number of clients and helping them prepare for the application. What are you specifically doing? What documents are you gathering? How are you sort of facilitating that process?
Essentially is that I have already received a lot of inquiries. It's a matter of getting together your current financials, and particularly getting from, if you have a payroll company, is like an ADP or basically Paychecks, getting basically their monthly reports, because that's something that is almost certainly going to be needed for attachment. And if it's not needed for attachment now, then certainly when it comes time for the debt forgiveness portion of it, you're going to need to certify off on those statements. Now, some companies are so small, or the sole proprietorships, the partnerships, that basically they don't even use payroll. So those types of statements will be available April 10th. There's supposed to be another round and another application. So we'll find out more definitely then. The other thing is that, again, mid-sized businesses will tend to have up-to-date financials. If not, basically, if you're a small ownership, then what you have to do is start putting together all of your mortgage statements, because that's going to be part of it, all of your rent, all of the, and then the other thing is that even like the payroll expenses. So like the cost for having a major company doing your payroll is also going to be one of the areas that gets forgiven. So the more information that you have in getting your financials together, that will be very helpful. The sample application is asking mostly for payroll, but you're going to need a lot more of your complete financial statement and a balance sheet. The other thing to do is also make sure that like your current ownership is correct, recorded with the secretaries of state, et cetera, that you make sure that all those changes in ownership that may have occurred basically are still valid.
Barry, maybe this is a question for you, maybe for our for Citibank, for Hytham as well. But what do you anticipate being sort of the biggest pitfall in the application, the part of the application that's going to be most confusing for people, or potentially hold things up if there is anything in there?
I would say essentially not having payrolls but done by a major source would probably be one of the major ones. The other thing is that it wouldn't hurt probably to get a certificate of good standing, or at least find out from the secretaries of state that you have basically are valid. Maybe
Okay.
printing that out, having that available immediately, because I do a lot in Connecticut and New York. The Connecticut Secretary of State office is having their own computer problems just due to lack of people. So when it came time, like March 31st was the Connecticut deadline for annual reporting, and the site was crashing. And they were not optimistic about getting everything up and running. So if you can get that certificate of good standing, that would be very helpful. And then also working with your professional bookkeeper, accountant, and also, reaching out to law firms to help you in this process, because it is probably going to be confusing. And I would say the other thing I wanted to dispel right from the start is that if you listen to the popular media, the idea is on Friday, you're going to be getting money.
Right.
And I don't think that's going to be very likely for anyone. And the good clients and the mid-sized firms already started on this process 2-3 weeks ago when there were winds of what was going on, and at least refining what their financials are. And remember, financials changed greatly. Is that there were many small-sized, medium-sized, and great-sized companies that in February, their financials were looking great. Right now, they're looking kind of dismal. Right. And they're only going to get worse until the whole country gets better. And I'm a pretty optimistic guy. I know that it will get better, but it's like your financials need to be extremely current.
Right. What are you advising? We've had a number of people in the Q&A ask questions. The payroll is essentially their 1099 employees, and so they're not on payroll, but they, take distributions, or they, just are paid as an independent contractor. How are you advising them, and how does this process change for those individuals?
I would say that for people who are 1099, and I have a lot of clients like that, and then I have clients that are basically employing a lot of 1099s, we will be seeing more guidance by April 10th. The idea is that the maximum you probably will get is 2.5 times your annual average of all of your contracting jobs. And I do want to stress it will be a sort of combination of all of that you're doing. So I have everyone from a concert violinist who basically winds up playing all over, and no one is performing. So for her, it's going to be critical to get one of these loans, but she probably plays for 5 or 6 different orchestras,
right,
making sure she gets all of that together. And then also I haven't seen anything from SBA specifically what they're looking for, but I have a feeling it's going to be last year's 1099. And I think also there's going to be a lot of requests for small businesses to provide a current 1099 equivalent to people. So at least it shows the name of who the contractor is and who the contractee is. So that way it can be used as further proof that you were employed.
Just to piggyback on Cooper's question, Cooper, I see a few questions in the Q&A about, obviously a lot of closely held businesses, the partners pay themselves by way of distribution. The payroll definition in the application doesn't really speak to that. I don't know if either of our city professionals feel comfortable speaking to that issue. It's been a pretty common question in the Q&A, and or if Barry has any thoughts on that piece.
I would say that a lot of it is going to depend upon what last year's distributions were. And that basically is that and then the other thing is we're also at a point where a lot of small and medium-sized companies postponed even their tax gathering process. Because the deadline moved out from April 15th to July 15th, the smaller ones haven't filed for 2019, and the most current is 2018. Whether or not the banks are accepting 18 data or 19 data, or whether or not they want a current revision, but the idea is start gathering as much information as you can now and get your financials to be fairly current. I can't stress that enough. Even if you can just do a projection through the first quarter of 2020, that will be helpful combined with what the 19 or 18 was.
Gotcha.
Some of the pitfalls also that we could probably foresee is the use of funds. So we want to try to make sure that the use of funds are being used for payroll, and that would be documented, because the portion that is going to be forgivable is going to be for payroll, the payroll aspect of it. So that's where I want to stress that when you actually get approved for that loan, that you document the use of funds for the next 8 weeks at least, because when you're coming to apply for the forgiveness part, we would want to probably see that. And just to add to Eliza's point, is we understand that this basically pool is going to be limited, and businesses that have pivoted and have need for increased capital definitely would want to look for other resources of funding. So having financials for the past 2 or 3 years is going to be very helpful to actually put them in other solutions that would help them grow. So even though the PPP or the CARES Act fund is going to be limited, they would want to actually go in for something else with their bank or their financial institution to help them either grow or sustain what they have right now until this crisis is over.
This is maybe a question for Hytham or Alyssa. A number of people have asked questions about what happens if you don't have a relationship with a business banker. What would you recommend? Would you recommend trying to form one today, or are there resources out there for people who are looking to find the best place to attack this application with?
Well, we're making this application available to anybody that has, online banking. So we're very proactive in getting the message out there and having the link available, and just it's a matter of having the right guidelines so our clients are not confused. And that's probably the delay, that we haven't put anything out there. We will have a landing page for just for this application throughout our entire firm. So this way, when they actually log in, or it will be also on their statements, that to encourage them to apply on that link. So even if they don't have a relationship manager, or if they haven't connected with them in the last couple months, which I always encourage to do all the time, we will be, all the firms are proactive to help our small businesses.
I see.
Correct. Also, the banks, I just wanted to add to Hytham's statement. The banks will be in communication, whether they have an assigned credit officer or commercial banker. The communication will be constant between the bank and the client via email. So it's very important that when they do log in to do the application online, that they list their current updated email address and who the contacts of the business. That will be very important, because the contacts of the business should be the owners of the company. Because when the loan is approved and it goes into document preparation, that's who will need to sign the final document. So you don't want to get to the finish line and then one of the owners is not listed, and now the docs have to be redone, and then time, as we mentioned, time is of the essence. So we want to make sure that clients are guided, and we want to educate them. So I am speaking to all my clients. In the past 2 weeks, I've called every one of them, and any client that's a small business client will probably wind up walking into a Citibank branch and speaking to a business banker and saying, I need help with this. And they're going to be guided to go onto the website. We also will have talking points for them where they can, a lot of the questions that are being asked, we will be sending out these emails, and a lot of the questions will be answered, and clients can use that as a reference. But the main thing that we want the clients to know with the PPP, and I don't know, I believe it was touched upon earlier, is that the number we're going to use for guidance regarding loan amount would be the 2.5 times of their average monthly payroll. So it's really crucial that they get those payroll reports in as soon as possible from their vendors, from their third-party providers. That's going to be key. And actually, we can tell you right now that we cannot submit the application without that document. We could not. I just got off a call. That's one of the required documents. And if an application is submitted without all the proper documentation that's required, it's going to be kicked back, and that client's going to lose valuable time. So as a banker, we are communicating that with our clients, making sure that every package we submit is complete, and that it moves forward to the closing stage. That's the goal here. There are some clients that will not be approved, and there are only 2 reasons why a client won't be approved. One is that they do not meet the SBA criteria eligibility, and the second will be that they are restricted industry as far as Citibank or their lenders' guidelines. Every bank has risk criteria, and if their industry does not meet the criteria, they will get a decline letter. And that's why it's so important, as Alyssa mentioned, that they have other options and other resources, because we don't want them to get discouraged. We know these companies need the funds, need the capital as soon as possible. So it's important that as bankers, we educate them and give them other options.
Idia, do you have any thoughts, or are you able to speak to the really common question that we're seeing in the Q&A, which is whether partner draws or partner salaries that are not on payroll, so they're taking draws or distributions, would count towards the payroll definition?
The understanding is that there is the cap on any partner's or owner's salary. The cap is 100,000. I don't know if that was discussed earlier. So regardless of their income or their wages, the cap on any employee is 100,000. So that's another reason why the reports are so crucial, because the underwriters will be going through these reports and coming up with a number, a dollar amount that they're eligible to apply for. We don't expect a client to figure this all out. You know, they're busy with tending to their business. So that's going to be done by our underwriters, and they'll come up with a dollar amount. On the application, the client will list a dollar amount as well, but that number might change as it goes through the process. So to answer the question, it's 100,000 cap.
And this kind of segues to a question that I see from Daniel Silverman, which is, if one of your employees is over that cap, do you still count $100,000 towards the payroll, or is that employee totally kind of disqualified?
My understanding is, Lee, is that it counts up to 100K,
Yes.
but no more than 100K.
Absolutely. 100% right. Yes. Up to 100K. They are not going to be eliminated, or they're still eligible, but it's 100,000 is the cap for that particular employee or employees.
I just want to ask a quick question clarifying, because I did see the guidance that the Treasury put out earlier in the day. I am correct in that the repayment is going to be 2 years. Is there any negotiation around that, around the repayment terms, around the interest rate or the repayment terms, or is it really locked in at the rate that the 2-year repayment term that the government just put out?
My understanding of the law itself is that it is a variable rate that can go up no higher than 4%. And that's something to be aware of. I mean, obviously the Fed is going to probably keep a very low rate, and that the current rate is 1/2 of 1%, 0.5%, but it could increase. And you have to really take a look at some of the forecasting, and it's unlikely that in the 2-year period coming out of this, the Fed, and it's also almost a self-perpetuating cycle, because the Fed now has all this PPP money out there, is that for them to raise rates becomes politically and physically more irresponsible for them to do.
Gotcha.
I see some questions about fluctuating staff. So in the event that, for instance, staffing increased in January or February, and then, so obviously there's a higher burden on the company to pay that staff. Is there a way that those companies can factor in that increased staffing that took place over the course of the last couple of months?
The understanding is that if they have any significant increase or decrease in the past first quarter of 2020, because the covered period starts February 15. So if they have, that will be taken into consideration. So in a case like that, it's important that the client give us the last 12 months for 2019. And I would suggest that they also include January, February of this year. And they will have to give an explanation of why there's a significant change. What caused it, why, and are these employees going to be permanent? And keeping in mind that when they go to apply for the forgiveness sometime June, July, we will look again to see what the payroll is at that time. We will also look to see what the employment is for that particular company at that time. So all of this will be taken into consideration.
And there's a difference between the forgiveness portion and the loan portion, because the loan portion is it also has a lot. They also want to make sure that seasonal employees are taken care of in the maximum that you can borrow. Now, whether or not that then gets forgiven because they have not been employed for like the last 8 weeks, that remains questionable. And that's something that's basically an open area, and an owner has to be careful. I may be winding up borrowing more money than I will be forgiven for.
Correct.
Alyssa,
Well, just to add to this, so with this loan, there's no prepayment penalty. So,
Right.
so if any circumstances they end up borrowing more than what they actually use, I think they can pay it
Right.
back without a penalty.
Right,
So
exactly.
that's it.
Alyssa, a couple of questions about the employee retention grant, and I know it closes tomorrow. And the
Yeah.
questions all seem to be of the nature, the documents have to show 2 months of injury, but we're 3 weeks into the COVID-19 crisis. So some businesses only have, 3 weeks of injury or 2 weeks of injury, depending on the industry. What documentation can be provided to show that?
Yeah, so from my understanding, you're allowed to provide partial documents for March, like up to you have to this point. It still needs to be factored into the other 2 months that you've provided and result in a 25% or higher decrease in revenue. So you can submit that documentation as well, but it still in total has to add up with your other months to 25% of a decrease or more.
See a question about the $10,000 disaster loan and whether if you apply for and are approved for that, and then you apply for this loan as well, whether that $10,000 is deducted from the loan you received through the Paycheck Protection Program or whether there's an aggregate.
The 10,000, the first 10,000 on the EIDL will be treated as a grant. Anything over that amount will be a loan. And as I explained earlier, because it doesn't have the forgiveness capability, the clients now that have applied for that loan are able to refinance using the PPP. So the PPP, the guideline is 2.5 times the average monthly. So if you're looking at a company, let's just use 100,000. That company can essentially borrow 250,000. So the 250,000 should be used for 8 weeks payroll. The 8 weeks payroll would be 200,000. So the 50,000 excess can be applied to the other qualified expenses that we discussed, such as the mortgage interest, interest on other existing loans, rent payments, and utilities. If they use it for that purpose, then when the forgiveness period starts and they can document all that, it's very likely that the entire loan can be forgiven because it was used as intended during the period intended. So in addition to the 250, in a scenario that I'm speaking of, let's say they have a 300 EIDL loan. If the 300 was used for any of the acceptable reasons that we discussed, they can refinance that and ask for forgiveness on that portion as well. Now, keep in mind, the lender is the one that will determine if they meet the SBA criteria for use of funds, and the lender is ultimately the one that decides if the loan's approved, if it's declined, and what portion of it will be forgivable. So it's important that the client document everything with regards to use of funds, because that's going to be critical in the bank determining if it will be forgiven.
And again, it's a situation where work very closely with your accounting, with your bookkeeping departments. Make sure, above all else, all your books remain current, that you're posting things quickly, and making sure that everything is done accurately, because it is a changing landscape.
Absolutely.
So what you're saying is, I know there's so much to do out there this weekend, but you probably should be working on this weekend.
You should, I think that basically you should be working on it late tonight. Like, I know that I'm going to be very busy and not planning on doing anything else, but just working with my existing client base of getting their financials up to date and starting on them on their application process. And then, like all applications, is that basically reviewing with them, what exactly are they committing to? And then, for example, this is also an area where, like, law firms, and particularly your firm, is very, very useful in just making sure and reassuring clients of what these commitments really mean.
And one thing I want to mention there is, you know, for businesses that have other loans, if you have a mortgage or a loan with respect to real property, you want to check all your other bank documents to make sure that this loan is not going to interfere with your obligations in other areas. And that is an area where you really want probably a professional to take a look at those documents to make sure there's no conflict. I see a really good question from Kathy about that $100,000 cap that maybe our city professionals can speak to. Is the 100,000 just salary, or does it include medical benefits, other benefits, or are those put in a separate box than the $100,000 salary cap?
I believe as of now, I think it's just a salary, just a basic salary cap.
Right.
If anything changes, we're probably gonna have to find out about that. But as of now, it is just a basic salary, not bonuses, not including bonuses or anything else. If they get paid an incentive, that should reflect on their salary statement from last year's. Correct me if I'm wrong, Barry.
I would say it's W-2 wages. Whatever appearing in your box one of your W-2 is a very good indication of what Treasurer is thinking of as wages.
Correct.
Okay. One additional note that I want to also mention that you mentioned existing loans. I really do encourage, a lot of people have been doing that. I really do encourage small businesses is to contact their bank with their existing loans, is to defer those payments for the next 60 or 90 days. We've been working a lot with our existing clients to help them through this process, where we have reviewed and approved deferment up to 90 days. So I do definitely encourage, that would help a little bit on the pressure. The deferment are usually on 0% rate. So you basically just push your payments 60 or 90 days with 0% penalty. That is very, very important. If you haven't done so already, you should. And then that would actually ease the burden a little bit.
I saw a question from Lauren in the chat asking about restricted industries. Do you know if there are any industries that are prohibited, if you know, certain types of businesses that wouldn't be able to get these loans?
So each bank, each bank has guidelines, and they have, you know, certain risk criteria that they look at. It's, you know, it depends on you know, the types of industries, whether if they're already listed on their restricted lending industry, they will probably not be qualified, and that's why they should really look at different avenues at that point to borrow and to help them. And Eddie, maybe you could elaborate a little bit more on that.
I mean, I have a couple actually in my portfolio that I know are restricted, and the client knows as well, because they've tried to acquire some financing in the past. Just to give an example, a diamond importer or precious metals company. Also, there is, for instance, there's auto dealerships is one as well that I know offhand. So those are two that I know offhand, but it's really, I wouldn't discourage them from applying, because if their loan is under $1 million, it will go through their small retail bank, and they might have a different criteria than the commercial bank. So I would still advise my clients, you know, do the application, and it doesn't hurt. You know, they can go on the link and apply. 2 different underwriting groups will be looking at that app. And also there's other SBA vehicles. Maybe they can do the EIDL. I don't know if there's any restrictions there, because it's underwritten directly by SBA. There's no lender. In this case, because there are lenders and the bigger banks, you know, the Chase, Citibanks, B of A's, they all have risk criteria. So that will apply. That will still apply with these SBA loans. Another thing I just wanted to mention, if you have any clients that currently have SBA loans, I do a lot of 504, which are for real estate, mainly used for real estate, and it's backed by the SBA. 40% of the loan is guaranteed by SBA. I was just informed yesterday, and I was able to confirm this, that part of the stimulus package, there were funds that set aside specifically for these SBA 504 mortgages. And when a client has a 504 mortgage, they have a primary bank, in this case it would be Citibank, where we lend the client 50% of the purchase price of the property, and the SBA lends the 40%, and then the client's injection is 10%. The understanding is on that 40%, any existing client right now that has a mortgage with SBA, those payments are waived for 6 months, and the client doesn't have to do anything. It's automatic that the servicer on the loan will stop payments for 6 months. So I advise, if you have any clients out there that currently have a 504 and they still have that second loan, as we call it, because some clients refinance that, but if they still have that second loan, they should definitely contact their bank and just confirm, because we just got this news last night.
A few questions about employees and rehiring. So if employees have been laid off, over the past few months or the past few weeks because of the crisis, and they're rehired, is June 30th the cutoff by which they have to be rehired? Are there any limitations? For instance, should the employee not be filing for unemployment? It seems to me like that wouldn't matter, but there are a couple of questions about that.
Well, I would assume that the employee already applied for the unemployment. I don't know, I'm hearing there's a backlog there as well, but I would assume that they applied as quickly as possible. The understanding is that these funds are to keep American or with a paycheck in their hand, right? That's the whole purpose behind this PPP. So the client, the business owner will, at the time that they ask for the forgiveness, have to supply the bank with information regarding payroll. And that's where the bank will be able to see the unemployment, if there's still unemployment. So that's really a tricky question. I don't have an exact answer on that with regards to the period. Is it going to be June? Is it going to be after June? June is the covered period for the proof of the expenses that have to be paid within that period. So I can follow up on that. That's one of the same questions we're having on our end with SBA that we have sent up to our SBA director within Citibank. He's had a lot of meetings directly with SBA, trying to get more guidance on that, because there are a lot of questions that are still coming in that we don't have the answers to. And it's important that the businesses do get the answer, because we don't want this to be an issue later.
So with respect to answers, I want to be conscious of our panelists' time. It's 5:30. So I think a few of our